So make sure, as much as you can, currency call Monday to Friday, 11 a.m. GMT +8. Make sure you turn up. I go through the Aussie US and the New Zealand US dollar on Monday. I look at the euro on Tuesday. I look at the pound on Wednesday. I look at all the yen pairs and gold on Thursday. And then on Friday, I look at Canadian US dollar, all right, or US CAD. So make sure you turn up for the currency call so that I can guide you through, and this is absolutely free, guide you through what I think about those currency pairs on those specific days. Market analysis on Forex Trading Asia is also there for you to use, absolutely free. I publish my analysis, I publish my views there. We have in-house writers, we have experts from all around the world writing and contributing their market analysis for you. So make sure you get onto Forex Trading Asia. I know most of you are already on the Telegram Trade Signals channel. So, make sure you use the trade signals. Been seeing very good results on the signals. So make sure you take advantage of that. And then lastly, again, on Facebook, LCMS Traders Club, the link is there. I have pinned it there. Make sure I'll give you time in different intervals. Make sure you click join, make sure you sign up, get on board. All right, I know you can do this on your own. I know you can try and figure it out after this 4 days and review the slides and all that kind of stuff. It's possible, but it's going to be hard. It's not going to be hard. It's actually going to be very, very hard. Let's guide you through the whole process. Let's give you the analysis. Let's guide you through the signals. Let's give you the Monday and Wednesday coaching sessions. Those Traders Club members also get to attend when I do my live trading events. Tomorrow, non-farm payroll live trading event. I will be trading a live account, showing you exactly what I think of, well, talking through what I think of, how I look at the trade, how I plan before the news, right? A lot of times people hate trading news because they get caught, they get surprised, they don't know what's happening when the numbers come out and the market starts jumping. I'm the calmest person when I'm trading the news because I planned everything out. I've gone through all the scenarios. I know exactly what I want to do during the news and after the news. And a lot of my students have seen that. Through the years, I always trade live in front of my students. They have all seen that. They have been able to repeat and replicate that as well. So make sure you take that opportunity, join LCMS Traders Club. The 5 steps. The 5 steps. So I've shared with you this table already. Every trade I do, and this has been almost since I started trading. I adopted these 5 steps very early on. Normal questions or usual questions I get, people asking me about these 5 steps is, how did I develop it? I don't know. There wasn't a moment where a switch flicked and I developed these 5 steps. It wasn't a moment where I woke up and I developed these 5 steps. These 5 steps are exactly what I progressively built upon. These are the steps which through my experience, I've learned that, these works. And these 5 steps are actually so crucial because trading can be very emotional. You look at the market jump up, you want to buy. You look at the market jump down, you want to sell. And then when you do take an action, it reverses against you straight away. You sit there and you're wondering, why did I buy? Why did I sell? Was there a reason on the news? Was there a reason on the chart? Or did I just lack discipline and wanted to jump into a trade? These 5 steps are designed here to make trading a little bit less emotional and a lot more logical. Because every time you come across a movement in chart, every time you come across something that you want to enter a trade on, every time you come across something you want to do, what's going to happen is you're going to look at these 5 steps, or you should be looking at these 5 steps. And by going through the 5 steps, you adopt a very logical thought process that will give you the reasons why you want to enter a trade, rather than jump into a trade and regret. So step number one, the fundamentals of the currency based on previous economic news and economic data or any policy form, it gives you the idea of whether currency should strengthen or weaken. Right? Think of which direction the economic drivers are pushing price. Sometimes even if you don't know the fundamentals, even if you don't know the economics, like right now, you might be very new to trading and you're not sure where fundamentals of pound is going. Look at where price is pushing. Look at where, when the news is released, where does price head towards? That gives you an idea of where currency should be strengthening or weakening. Then you come to step two when you start looking at trend. With trend, your question or your answer is price moving up, down, or across? When you look at trend, try and see the trend. Don't try and predict the trend. Right? What I mean by see the trend is you look at it and you go, where is it moving? Not where you hope it goes to. A lot of times people look at trend and they say, well, price is moving up, but I think it's going to turn back down. And then they start looking for it to go down. Step number three is your support and resistance lines. I know I said that over and over and over on day three, reiterating and repeating how important your support and resistance lines are. Thank you for everyone who did the selfie. I will be sending you your support and resistance lines, my support and resistance lines over to you via Facebook. If you haven't already done that, tonight is your last chance. Take a selfie as you are attending this session now. Take a selfie of yourself attending this session now. Hashtag 4-day course and tag me. Don't hashtag me. Tag me. Add me as a friend and tag me on Facebook so that I know who I'm going to send my support and resistance lines to. For the lines, make sure you check and double check your support and resistance lines. Every time you can adjust them, look at it, review and adjust. Step 4 are your indicators, Bollinger Band. We went through that. MACD, stochastics, and the PSAR. Do they show you strength or change? And remember, look at these indicators sequentially. Bollinger Band, MACD, stochastics, PSAR. It doesn't work if you go PSAR, stochastics, MACD, Bollinger Band. Right? Even in these 5 steps, it doesn't work if you go indicators first, then look at trend, then look at support resistance lines. You should be working from step 1, 2, 3, 4, and then 5. Step number 5 is really there to keep you aware if there are any speed bumps coming ahead. Do you want to enter a trade now with a big news coming out in maybe an hour's time or 2 hours time or 3 hours time? Would you be able to enter a trade, make money, and close your trade before the news comes out? Would you be able to enter a trade and hold it through the news? That's the reason you have step 5 there, so that you know what's coming up. You don't have to enter a trade and go, oh wait, now that I've entered a trade and there's a news coming up, what should I do? Should I close at a loss? Should I close at a small profit? What should I do? Step 5 is there so that there's no surprises or little surprises when it comes to your trades. In general, how you should be looking at these 5 steps is you shouldn't even be thinking of looking at the charts and then saying, I want to buy. Let me use these 5 steps to tell me why I want to buy. Or you shouldn't even be looking at it going saying, I want to sell. Oh, it looks like it's going down. I want to sell. Let's go through step 1, 2, 3, 4, 5 to tell me whether to sell or tell me to sell. A lot of times, if you do that, if you already decide that you want to buy or you want to sell, and you go into the 5 steps to look for a reason to buy or sell, it's going to drive you totally insane, because there will be things that you will convince yourself to tell you that it's going to go up or go down. So avoid deciding or avoid making that decision before you go through the 5 steps. I always say allow the answers to guide you through that decision. How you allow the answers to guide you through that decision? Look at it, you go, step one. Oh wait, currencies should strengthen. I might circle strengthen, or if you have a piece of paper, I would draw an up arrow and say it should go up. Trend, is price moving up, down, or across? If price is moving up, I would draw another up arrow again. So I have step one pointing up, I have step two pointing up. Then I'll look at step three, support and resistance. Is price bouncing off? Is it moving towards? Is it breaking through? Let's say it's breaking through resistance. So that's resistance, it's breaking through resistance, it's going up again. So now I have step one saying it's going up, step two saying it's going up, step three saying it's going up. I've got three up arrows already after three steps. Then my indicators here will tell me whether it's as a strength or change. Is it outside or is it inside Bollinger Bands? Is MACD crossed over? Do we see that triangle pointing upwards? Is it on the H4 time frame? Is stochastics in the overbought region or is it in the oversold region? And then PSAR, is the dot far or is it near the candlestick? Then after that, with the economic news, is there any news coming out? So already after step 1, 2, and 3, I've got the up arrows telling me that I should be looking to buy. The indicators tell me that whether it's likely to change or whether it's going to continue moving up quite strongly. That's where I develop that decision to buy, rather than to say I want to buy and then go through those steps to find reasons to buy. Answer the steps based on the current, not what you hope to see. So don't look at support resistance lines and you see price moving towards the resistance and you say it's breaking through, or I hope it's breaking through, or it looks like it wants to break through resistance. Price is either breaking through, it's either bouncing off, it's either moving towards the support or resistance lines. It is not hoping to break through. It is not looking like it's going to break through. It is not wishing that it will break through. So answer the steps based on the current things you see, the current action you see, not what you hope, not what you want. As I said already, go through the steps sequentially. It doesn't work. It doesn't work if you jumble the steps up. And then understand, most importantly, understand that this is not going to work 100% of the time. Through my years of using these 5 steps, of teaching these 5 steps, through looking at students deploy these 5 steps, we've seen that we're hitting about 60, 70, 80% accuracy on these 5 steps, just based on these 5 steps. 60, 70, or 80% accuracy just based on these 5 steps. But yet I do come across a lot of students who would say, wait, it's 60, 70, 80% accurate. Let me focus on that 40, 30, or 20% where it's inaccurate. I would say divert your energy on making sure that you take advantage of that 60, 70, and 80% rather than that 40, 30, 20% where it doesn't work. Understand that not all trading strategies work all the time. In fact, no trading strategies work all the time. A strategy that you trust and you're confident with, that you can deploy over and over and over again, is a strategy that you want to keep and use so long as it's profitable, right? So it's not going to work all the time. It is repeatable because all you have to do every time you want to enter a trade is to go through 5 questions. So how do we look at these 5 questions? I'll show you next as we work through chart by chart, trade by trade.